Hi, I'm Jenny Brown and a very warm welcome to our weekly buy-to-let mortgage market update. I hope everybody's doing super well today. It's Wednesday morning, it is pitch black outside and it is raining. Thank goodness I have a day of homeschooling to look forward to cheer me up. I hope everyone's keeping really well. Really good news with the vaccine rollout. So I've heard of quite a few of my clients now who have had the vaccine. The general kind of feedback is that some people have felt absolutely fine afterwards. Some people have felt a bit fluey and have had a sore arm, but that's lasted for no more than really 24, 48 hours. So yeah, things are really starting to hopefully move in the right direction for us. In terms of what we're going to be covering today, we're going to be doing our lender update. There's a re-entry into the holiday let market, which I'm really excited to share with you. We're also going to talk about some predictions on the upcoming March budget. We're going to give you some limited company buy-to-let data, which is quite interesting. And lastly, we're going to be covering off some house price news. So lots of good things to cover off today. So the lenders have been busy in the last week. First of all, BM Solutions have released some new 2 and 5 year fixed rates, which start from 1.76%. Now, BM Solutions, like many other lenders, have a series of interest rates where you have the lowest interest rate with the highest arrangement fee and then the highest interest rate with the lowest arrangement fee. But their rates are really, really competitive. When we're sourcing for clients in that particular space of the market, so the very vanilla end of the market, they are coming up incredibly well. Now, their products also have on remortgages a free valuation and cashback as well, so very competitive. Now, BM Solutions are a lender who used to be absolutely prolific in the buy-to-let space. They've really kind of scaled that back, particularly when, because of the credit crisis and also the fact they're now owned by Lloyds Banking Group, but they still have some quite neat pieces of lending policy in the background there. So first of all, to access a mortgage with BM Solutions, there is no minimum income requirement. You can have up to 10 buy-to-let mortgages in the background, and 5 of those can be with the Lloyds Banking Group. And one of the things that I really like about BM Solutions is they're quite flexible on property types. They can consider things like ex-local authority flats, studios, flats over commercial. And what they tend to do is, rather than have a set piece of lending policy being quite prescriptive in terms of what they will and won't lend on, they tend to say, well, on the face of it, this is fine, but actually we really do defer to our valuer for comments. That's really, really good. We've also seen in the last week the Skipton Building Society reduce some of their buy-to-let rates between 0.05% and 0.13% reductions, and they've now got rates from 1.69%. Now, very similarly to BM Solutions, Skipton allow you to have 10 properties in the background. No more than 5 can be with the Skipton Building Society. They do have a minimum income requirement, which is $20,000 a year or $16,500 net pension income. But they do allow mortgages to run up to your 85th birthday. So they're very, very good for those slightly more mature borrowers. Now, another piece of news that came out in the week, which I thought was quite interesting, is that Santander has made the move to extend all of their existing mortgage offers, mortgage cases which have gone to offer by 2 months, as long as the application was submitted in 2020. And this is really, really good news for those borrowers who have mortgage offers in place with Santander, but whose applications are facing delays because of a protracted completion process. Well done, Santander, for thinking a little bit outside the box there and bringing something to the table to help borrowers out. Now, also this week, we've seen the Furness re-enter the buy-to-let and holiday-let market. I was reading an article at the weekend which was saying that UK vacations are going to be an absolute boom in 2021. Not so much, I think, because people don't necessarily want to go overseas, but just because we don't actually know if we're going to be able to go overseas. So just because we've got a vaccine doesn't mean that the countries overseas where we might choose to holiday will let us in or have their own vaccine policies. It's going to be quite interesting to see how that all shakes out. But on the back of that, they are predicting a really huge boom this year in terms of people looking to vacate within or in the UK. So it's quite opportune that we've seen the Furness re-enter the holiday let market. Now, what they do is, rather than do a sort of standard rental income calculation in terms of affordability, which some of the lenders who are in holiday let lending do at the moment, What they will do is an affordability calculation where they can use up to 50% of the gross holiday rental income, plus their applicant's own disposable personal income as well, which can work out very, very well for those properties which are not naturally high yielders if you looked at an AST income. So, for example, Salcombe in Devon, to buy a property there, it's very expensive. The AST income you get on a property there would be relatively low. So on the holiday let investments in those areas, it can be quite hard to gear up. Now, the Furness can go to 75% loan to value as well. They can do interest only or repayment. Now, a couple of other things which I think are really neat. So first of all, borrowers can actually stay in the property for up to 90 days a year. So you can buy it as a holiday investment, but actually you're not precluded from using the property yourself, which is really good. And the other thing is that they're able to lend on properties across England, Wales and Scotland, including the Isle of Skye. So they're actually able to consider properties on those smaller Scottish isles, which again, not every lender will do. So fantastic to see the Furness come back into that market. Also with lenders this week, we have seen West One release a new 75% loan to value limited edition product. Max loan is £500,000 and it's priced at 3.44% with a 2% fee. Now, this is a pay rate product, which means that the rental calculation the lenders are going to use for this is 125% at 3.44%, assuming you're buying through a limited company. Now, they've also reduced their pricing on their specialist and HMO ranges products by up to 10 basis points, and their products now start from 3.44%. They've also brought into the market, which is very, very good, some 80% loan to value products. This is for their standard range only and for purchases only, so no remortgages. And the maximum loan size here is £250,000 and rates start at 4.04%. Now, it's really, really good to see another lender come into the 80% market, because I think it's fair to say that we're fairly sparse on choice at that end of the scale. Additionally, West One have re-entered the short-term let, a holiday let market, and also the expats. Now, in terms of West One, they are definitely a specialist lender. The pricing that I've referred to just now will tell you that. They're very good. They can lend to individuals and limited companies. They have no maximum properties in the background and some other really neat pieces of lending policy. So it's really, really positive to see these guys really coming back into the market with full force. Now, lastly, with regards to lender updates, Aldermore mortgages have now returned to capital raising when you do a buy-to-let remortgage. So since the first lockdown, Aldermore implemented a policy which was that they were not going to allow people to capital raise, apart from for very, very specific reasons on remortgages. But they've now returned to allowing capital raising on buy-to-lets at up to 75% loan to value. Now, their remortgage products do come with free valuations and free legal fees on personal transactions. So they are very competitive in the more specialist end of the market. Some unique pieces of lending policy: no maximum properties in the background. Maximum age or maturity of the loan is 85 years old. They don't have a minimum income requirement for experienced landlords. And what they also offer, which I really like, is a portfolio product. So this is really good for those people who are looking to mortgage more than one property at one time. So you'll have one mortgage application, but you can have multiple properties on it. People really like these because it is less paperwork. It's very, very neat. So you have just one mortgage payment going out every month. There are some downsides to these as well, and we'll cover off portfolio mortgages in more detail another time, but if it does sound of interest, do give us a call. Now, finally, a slightly different bit of news, but I thought it was really worth sharing actually. There's a new mortgage lender coming to market later on this year called Perenna, and they've secured funding as part of their plans to obtain a banking licence to bring to market a Danish-style fixed for life mortgage. And they're planning on rolling this out hopefully in summer of this year. So what this essentially is for homeowners only at this moment in time, but it would be a mortgage which is fixed for the whole term of the mortgage itself, so up to 30 years. And what they have said is that this would come with flexibility to port the mortgage during its lifetime should the borrower want to move house. Now, this is a very, very unique thing. We've heard of fixed for life mortgages in other countries which seem to be incredibly popular. So it's really, really exciting that a lender is bringing one of these to the UK. Now, what Perena have said is that their product will be available to both first-time buyers and also home movers, but also remortgaging as well. So it should be available to everyone. I think in terms of the real pros of a lifetime fixed mortgage, first of all, it's just removing the need to keep on remortgaging every 2, 3, 5 years. Which ultimately will save you some real time and per estate also money. Now, I think that actually would remain to be seen because it really depends on the kinds of interest rates they're actually offering. The downside of taking a term fixed rate would be really about the devil being in the detail of the product. So how good is the interest rate? Can you apply for a further advance during the term of the mortgage? Can you make overpayments? How big are the ERCs during this time and for how long? So I think there's a bit more information needed to really ascertain how great this product would be. But I think it's just really exciting to see a lender bringing something which is, essentially totally new to the market. So we'll look forward to hearing more details and sharing those with you as they arrive. Okay, so we have the budget coming up in March, and we are expecting, and I'm sure this won't come as any great surprise to any of you, for there to be some tax rises. The one we're absolutely expecting to see is an increase in corporation tax. Obviously, the UK has a huge, great black hole in its finances at the moment caused by COVID. So at some point, they're going to need to, or the government are going to need to start looking to, fix that problem. And so corporation tax is the one which everybody is thinking is going to be increasing by announcement in the March budget. Now, beyond a possible extension to the stamp duty holiday deadline, we're not expecting to see any radical changes to property taxation in this budget. However, there is a lot of chat at the moment with regards to plans to potentially replace both council tax and stamp duty with what's been called a national property tax. Now, the expectation on the national property tax would be that people are taxed simply on the value of their home. And I think properties would need to be revalued for this. I mean, just to say that council tax is calculated on property valuations from 1991. It's slightly out of date there. A removal of the stamp duty, people believe, would remove the barrier to families for trading up to bigger homes, but also from elderly people who are in larger houses who want to downsize. So it'll be interesting to see how this one shakes out. I think any taxation which is based on property values is obviously going to affect those people, particularly in the southeast, where we have the higher property values. But also there is real talk that actually abolishing stamp duty altogether would be really great, not just for the property market, but the knock-on effect this has to the economy as a whole. So let's watch that space, and obviously we'll keep you posted. But I think really for the March budget, I think the key one we're expecting is to see corporation tax going up. Now, keeping in mind the fact that they're talking about corporation tax going up, linking nicely into the fact that there's been some research published by Hamptons, which has shown that during 2020, there were a record number of limited companies which were set up with the purpose of holding buy-to-let properties. So the report tells us that last year, there were a total of 41,700 buy-to-let incorporations, an increase of 23% on 2019. Now, they've said the numbers have more than doubled since 2016, rising 128% when the tax changes for landlords were introduced. So between the beginning of 2016 and the end of 2020, more companies were set up to hold buy-to-let properties than in the preceding 50 years combined. Companies set up to hold buy-to-let properties were the second most company founded during 2020. With companies selling goods online or by mail order being in first place, which I guess is naturally to be expected with obviously the switch in terms of people's buying habits because of COVID. So yes, that was really interesting. And I think, as a business, we have seen a huge move in terms of people favouring limited company structures for their property investments. But I think the numbers really just speak for themselves there in terms of the number of people that are really adopting this as their structure for investing in properties in the future. Now, I'm not going to go into the ins and outs of the tax implications of buying personally through versus limited company and the cost of those. That's a whole nother news story in itself. But if you are thinking about using a limited company for your investments going forward, or you're weighing up the balance of personal versus limited, or you're thinking about incorporating your existing portfolio, do give us a call. We're very, very good at this. We do huge volumes of limited company lending and mortgages for business, so we're well placed to have a conversation with you around that. Okay, and lastly, some housing market data for you. So the average price of property coming to market has fallen by 0.9% this month, with some sellers still hoping to tempt buyers and squeeze in a sale before the stamp duty holiday ends. And this is according to data from Rightmove. Now, Rightmove have gone on to say that new buyers are unlikely to beat the stamp duty deadline with where it is at the moment, as the average time to complete a purchase is now over 4 months. Its figures are showing that 613,000 sold subject to contract properties are still awaiting legal completion, and it's projecting that around 100,000 all of these will face an unexpected tax bill as they miss the 31st of March cutoff. Now, they do go on to say that nevertheless, visits to Rightmove are up 33%. The number of buyers contacting agents is up by 12%. The number of agreed sales is up 9% for January so far compared to the previous year. So I think, the real message here is that, there is going to be a slowing of the market for sure as people, rushed in to buy a property with the stamp duty announcement. And obviously, people have brought forward maybe decisions to make a move, which has caused a surge in numbers. House prices have gone up. We've always thought that house prices may take a bit of a knock at this time of the year, and it looks like that's starting to happen. But also what we're seeing here is that actually it's not that the whole people's interest in property purchasing has totally gone away. It's just that things are starting to slow down a bit. So, I think really that actually within that story, there's some really good positive news in terms of the property market still actually seeing activity despite things really starting to show a slowdown. That's everything from me this week. I hope you found it useful. If you do have any questions with regards to anything mortgage or property related, please do give us a call. 0345 345 6788, or have a look at our website. What we also have on our website, actually, which I failed to mention previously, is an online chat facility. So if actually picking up the phone and having a conversation with someone either isn't your bag or you've got other stuff to be doing at the same time, you can actually have a online chat with one of our brokers. You will be speaking to a broker, not a robot, so it's quite a neat facility that we have available. So that's on the website mortgagesforbusiness.co.uk. And so, until next week, look after yourselves, keep warm, keep safe, and I will see you next week.